without any delay, the number 5 investment for 2026 is going to be precious metals. And there's a reason why it's number 5 and not at number 1. And I'm going to cover that. There's a lot to cover actually within the precious metal realm, which I am going to include silver and I am going to include platinum in precious metals because they have in the past been categorized as precious based on their scarcity, based on their demand, based on the demand for precious goods in their respective industries, such as Rolex watches are made of solid gold. Earrings can be made of platinum, which are even more expensive than gold in the past. So I'm going to get into the spot gold, silver, and platinum prices, and then I'm going to give you some stocks because we're all here for that value add. I'm telling you the number 5 investment is going to be precious metals, but who would I be without giving you some price to earnings fundamental value across the precious metals and miner realm, okay? So first off, I covered this in a short a while back, or maybe a long form I did maybe a month ago when I first started the channel. But I looked at gold and I said, okay, well, gold consolidates for a really long time. Like when I say a long time, I'm like talking about 20 years. It consolidates and then it pumps for many years, okay? And then when it breaks that prior high, that prior resistance, that consolidation resistance, it will pump for years. And this is a weekly chart, but this, as you can see, when it broke resistance here in September 2004, it rallied all the way up for 7 years to 2011, where it found its consolidation top. Now, I call it a consolidation top because it does double top and then it does pull back, but it doesn't nuke. It doesn't crash. I mean, you can call a 40% drawdown in 3 or 4 years a crash, okay. But to me, it consolidates there for many years and then starts another leg up. And this is based against fiscal and monetary policy, US dollar, US denominated debt, and global debt, global currencies. So these tend to move counter to economic prosperity. Let me say that one more time. These tend to move counter to economic prosperity. You saw from 2004 to 2010, that was kind of, if you look at equities from 2004 to 2008, it's sideways and then it nukes. And then 2010, it finally breaks out. And then when equities break out, gold tops. So what we're seeing here is we're seeing the Mag 7, Mag 8 lead and make higher highs based on AI and data centers. But we're also seeing a rush to precious metals. And again, the reason why I put precious metals number 5 instead of number 1 is because they've already pumped. I mean, this is a huge pump, okay? This is like 2x in gold, right? However, I drew out this little technical analysis square here from the time it broke to the time it topped is 7 years. And if I'm just going to replicate that, make it super linear, super simple, of the time it broke in, early 2023, early 2024, and I draw that back out, it makes a lot of sense that gold is going to keep running to 2030. So who am I to call a top, right? I just see a pump and I say, okay, I'm going to put it in my 2026 top investments category, but I have to be careful because I don't want to lead viewers and listeners down the wrong path of saying buy pumps. That's not my methodology. I don't buy pumps. I buy dips. So if gold dips and silver dips, yeah, I'd be looking to buy. And that's why they made it in the top 6, right? So silver is the same thing. Look at that pump. My goodness. And it's actually on a logarithmic scale, it's actually less than gold because it's only 2x, right? And the RSI is way overheated at 91. The gold RSI is going to put in a bearish divergence very soon, 86 down to 80. And that doesn't really signify anything troublesome. Just means pay attention because you will get dips. You will get dips. Silver, again, and platinum is starting to pump, right? It's just crossed its 17-year highs. I did a short on this. Maybe I'll link it in the description. And I think that these are primed to pump more, again, over the next long term, right? So you should be hoarding gold and hoarding silver and even investing in platinum because the dollar is uncertain. And the US dollar denominated debt, 37 trillion, is uncertain. Nobody knows. Is the US going to pay off this debt? Yeah. Is the world going to pay off their debt? The debt to GDP across the world is 3x, 300%. That's, to me, I mean, does that sound right? If you're running a household and your debt is 300% of what you take home from your employer. Is that healthy? To me, it's not healthy. So to give you guys some alpha, I also went through some companies here and I mapped them out, like top 7, global companies. This is not on the US exchange, but these are. And this is, I brought in a China producer, which was very interesting because the China producer PE is at 17.8, which is a low PE, which is what I prefer when I'm buying things. I'm not chasing 124 PEs. If you don't know what a PE is, ask Grok. Maybe comment in the comments, what's a PE? How do I price things on a PE? I'll answer you. But for the purposes of this top 5, I'm going to be looking at Silver Corp. I'm going to be looking at Core Mining, Pan American Silver. I'm going to be looking at Newmont, even though Newmont is like, what is the market cap? It's like 100 billion, I think. Yeah, 116 billion. But look at that. I mean, healthy PE, guys. So if there's a rush to gold, the miners are going to trade 3x their sales, or they're going to trade at some multiple of what gold is doing. So if you have something that's directly correlated to gold, like directly exposed, as gold goes up, their price should go up more. And if gold pulls back, their price should pull back more, okay? The beta is pretty good. It's showing less risk than the market basket of goods, market basket of stocks. So a market beta is around 1. So this is pretty good. EPS solid, PE, and that's where you get the price. It's just the PE, 16 times the EPS is where you get the price, and 17 times 7, should equal 105, right? I would think so. Silver Corp, these charts look pretty good. I mean, again, I don't want to put it at number 1 when I'm buying 177% pump, but the gold miners will pump harder if the underlying spot pumps more. And what are we looking at? We're probably looking at gold to 9,000 by 2030. And that's being conservative. That's just taking a linear box here, putting that linear box here and saying, okay, $10,000 gold by 2030. I mean, it could go straight up to 30,000 based on a defaulting US debt scenario, So that's not financial advice. None of this is financial advice. I'm not a financial advisor. Thank you very much. And last but definitely not least is platinum. I wanted to say something about platinum is rarer than gold, okay? You can screenshot this, so I'm not going to spend too much time on this, but in the Earth's crust, platinum is rarer than gold. It's smaller above ground stock, so its supply, stock to flow, its supply is less than gold, making it more physically tight in some respects. So from a macro economist perspective, I'm the macro ghost. If something's supply is smaller than something else, and that something also has an industrial value, a prestige value, a platinum watch versus a gold watch, the platinum watch will usually sell higher. If it's Rolex, Apple to Apple, Piaget to Piaget, the platinum watch will be higher. But gold's price is higher now. That historically has not happened. This means gold trades at 1.8 to 1.9 times the price of platinum, continuing a trend where gold has outperformed platinum in recent years despite historical periods. So in my economic mind, I'm saying, okay, I'm going to be buying on pullbacks platinum because it's rarer than gold. Platinum is rarer and often considered more exclusive than gold. That's the point I wanted to make. Platinum cards, right? I mean, it makes sense, right? But gold is currently far more precious by market value. Very interesting. I see value in that. So how I would rank this? I would rank gold as the ultimate safety trade, right? Because it's primarily a monetary investment, a safe haven. It has a millennia of history and it's far more liquid than platinum. You can get rid of your gold real easily. Platinum might not be as easy. So as a safety trade, I would err to gold, but as a precious metal value trade, I would err towards platinum and or silver, okay? And you can screenshot this. You can do your own research. I like the low-cost China producers. I'm biased. I spent a good many years in China finding macro research, and I generally like a PE under 20. But around 20 is also the green light for me. A yellow light's around 45 to 50. And Barrick Gold is just, why is your PE that high? Why are you getting a premium? Basically, they're getting a premium, okay? Major tier 1 asset focus in America and Africa, strong cash flow from Nevada, exploration upside in copper gold. Yeah, but I'll take this one instead. I'll take Numa, just because if this can reach 115, this can reach 115 too. So that's my logic, okay? And then the platinum companies are all like negative earnings. So higher risk, right? Higher risk. No way here. That's a red. No way. No thank you. So in summary, I would probably hold the platinum spot or the platinum ETF if you can find one. But I would go for the silver mines. I would go for Silvercorp in China. I would go for Core, and I would go for Pan American Silver, largest primary silver producer in the Western Hemisphere, upgraded production guidance. I mean, if you're talking about precious metals doing multi-year pumps, these aren't shitcoins, okay? Shitcoins are Ponzi's. They go up and they come right back down. If you're holding shitcoins, I'm sorry. That's just, I used to hold them too. I don't hold them. But they're basically airware. They don't hold value. And what do I mean by hold value is if something is used for industrial purposes, look at autos, hydrogen, catalysts. So its price is more tied to economic cycles and could lag during slow, but it's there to make something. Jewelry, watches, gold is a store of value. Silver, AI, conductor, AI data centers. Very important metal that's also an industrial metal used to create robots, to create AI, to create hardware, software, chips. This should be like screaming green light in your guys' head. I mean, I'm passionate about this, but it should make sense, right? So hopefully I've made sense here. This is my number 5 investment. Stay tuned for the next 4 because they're going to shock you a little bit. And as a teaser, as we go lower and lower down this value chain, I'm looking for the things that haven't really pumped yet, right? So gold and silver and platinum have all pumped. Now I expect them to carry on this multi-year, multi-X pump, but I'm not the Mashiach. I'm not God. I don't know if it's going to go to 4,000 tomorrow or if it's going to pull back to 1,500 and lose all its value. So I'm just being cautious. Number 5, precious metals. Thank you very much. Like, comment, and reply in the comments. I'll link some videos for you guys to watch, and have a great new year.